4-step method to high performance trading is about bulletproofing your daily routines, your executions, your skill set, your mindset, and your beliefs to execute your edge trading in live time. Building your discipline and confidence in live time is how you will be able to produce those results consistently over the long term. The 7-step daily routine for high performance traders is about developing your process, your habits, your mindset, your beliefs, your skill set to master the markets. Bulletproof yourself for success and consistency over the long term. The links are in the description box below. They're both free downloads. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. Today we're going to go over rinse and repeat and just duplicating the same process each week, hunting out the same setups regardless of the instruments that you're trading and the session that you're trading. Being able to hunt out high probability candidates and then watching to see how they set up into your timing window. Most importantly, it's the setup, not the instrument. But if you're following one instrument, we'll look at examples of how that can put traders into a situation where they will look for trades instead of executing the same setups over and over again. Now, keeping things simple is finding the instruments that are offering us easy money trading setups. Now, what are easy money trading setups? We've talked about this before. Setups where there's zero stress, zero thinking, zero emotion, and zero management. So rather than trying to find a trade, we're looking for the instruments that are set up for rinse and repeat easy money trades. So for example, now this is my approach, my own thought process, and what traders are asking me about is that we have markets that, of course, they can move from one direction from the open of the day to the close of the day in one direction. But I'm not looking for markets where I can get in and have a direction right, because it's hard for me to manage that and reproduce that and scale it up in size. I don't know if that market, when I come to my New York session, although it may have already left without me once New York opens and I'm up high trying to buy something or trying to sell it up high where there's actually no short selling setup opportunity. Now contrast that with a market that sets up into my New York session where I can place an entry, a stop loss, and a take profit level. And the market is going to move strongly from the entry point until it hits a take profit level. Now, this is what I refer to as an easy money trade setup. Now, you're not going to find these every single day. There are other opportunities that can present, but it's important for traders, instead of trying to catch a trade or get into a move, which is not rinse and repeat or scalable, as opposed to an instrument that can set up like this, maybe even a weekly basis, depending on if you have a basket, to find these instruments. If you're following one instrument all the time, you may struggle to find the 90-10 setups, which is why I encourage traders to follow a basket, having a few indexes, having a few currency pairs, maybe some commodities or some energies, and some metals. We're only looking for easy money setups. We're not trying to read a market or catch a move. Now, I just got done saying in the first part of the video that Monday, Tuesday, Wednesday is day 1, day 2, day 3 on the front side of the week. Wednesday, Thursday, Friday is day 1, day 2, day 3 on the back side of the week. Now, just to put some clarification into this, we're just looking at any instrument, but this is the Canadian dollar, and this is a Monday, Tuesday, a day 1, day 2. Now, the whole point of the playbook is to help us identify instruments that are going to set up like this, and that's where we talk about a 3-session setup. So for me trading the New York session, a 3-session setup involves Asia, London, and New York once we have an instrument that has given us a signal day. Well, the signal in this particular case is that Monday's day 1 on the front side of the week, and it closed in breakout. It's the opening range, and it closed in breakout. That brought this pair up on our watch list. And then we have Asia, London, and New York creating a box. A box. Price is always in a box, and we talk about this repeatedly. We have a market now in a box, and we want to be selling high in a box if we're in a sell setup, or buying low in a box if it's a buy low setup. Now, this market has broken out. We know that most breakouts fail, and this is a day 2 reversal setup on the Canadian dollar. Now, we can try and find that opportunity anywhere if it sets up properly into the session that you're trading. Now, again, I'm trading New York. Traders may find these opportunities frequently in London. A lot of great opportunities show up in the London session. And we come to the US window, and of course, all we have left is the low-hanging fruit. And what the low-hanging fruit is, page 96 in the playbook, is when the market has already given the earlier session that opportunity that we're just looking at now. And all we have is the continuation opportunity in the New York window if it sets up accordingly. Now, keeping things simple, just as we just saw in the previous example on the Canadian dollar, we have a market that shows up on Friday's closing and breakout at the high of the week. How does price set up and behave the following day on Monday, day one, a day one opportunity, if we can find it, that we just saw in the Canadian dollar on day two? Now we have a 3-session setup. The same opportunity presents heading into our US window for an all-in scalable trade setup. And the same process applies. Entry, stop loss, and a take profit level. Same setup, different instrument, different day, but hunting the same opportunity day one, day two, day three. Now, similarly, we can find this on other instruments as well. We talked about Wednesday, Thursday, Friday on the back side of the week being day one, day two, day three. Friday's a day three, the closing range of the week. There's 2 types of opportunities we can look for on a Friday, trend trades or reversal trades. Now, in this particular case, natural gas came up on our list, closing in breakout. And we have a market now setting up into our US timing window. Same criteria apply. Entry, stop loss, and a take profit level. Now this is a Friday, so taking profits prior to the close of the day is what I would choose to do. I don't hold positions over the weekend, but same setup, different instrument, day one, day two, day three, whether it's a Monday, Tuesday, or a Wednesday, Thursday, Friday. If I can find this opportunity, as you can see, there's zero stress, zero emotion, zero thinking, and zero science project, and zero management. So we've gone over this in previous videos, and I asked the question repeatedly to traders, what setup are you hunting? And then the understanding, if your setup doesn't present, whether it's in the long direction, the short direction, whether it's the setup that I just showed you, do you have the discipline and the patience to do nothing else? It's usually taking trades that put traders into situations that put them on tilt, cause them to do self-sabotaging, irrational, degenerate gambling type of behaviors that can ultimately end up blowing up your trading account and doing psychological damage. And then the cycle repeats. But when you have playbook trade setups, specific setups, not reading price action every single day and marking off levels, which setup do you have specifically? And then how does price behave into the timing window of the session that you're trading? And then understanding how to execute, place your stop, and a take profit level. And if it's a scalable opportunity, understand scaling in, adding in, starting a position, scaling in, knowing when to stop adding in, knowing when to potentially take some profits off the trade to get paid, and then having the understanding to go to break even at a certain level and potentially walk away till close, as we talk about in the masterclass. Those are the types of opportunities that can compound your account. Traders who are at the screen trying to trade all the time, taking trades, it's very hard to reproduce any results consistently. But executing the same setups over and over again when they present on any instrument can help traders significantly skyrocket their success rate and develop that consistency through a daily process and a daily routine and sticking to the plan. Now, all markets are the same. If they involve people and they involve money and they move, there's a high probability that the same rinse and repeat opportunities will show up again and again and again. Now, here's an example of where a market on Wednesday, day three on the front side of the week, didn't close and break out on the Tuesday, but it actually broke out on the day. Same process applies: entry, stop loss, and a take profit level. Traders want to leave a trailer on a position. That's entirely up to them. It's the same setup, different day, different instrument. We're looking for rinse and repeat. We're hunting zero stress, zero emotion, zero thinking, and zero management type of opportunities. And so I would encourage traders, if you don't have a rinse and repeat setup and you don't know what you're hunting for, be very careful, because that's the type of situations that will get you into markets trying to take trades where there's not really an edge present, or it's 50-50 or maybe even 30-70. And as I've mentioned, those are the situations that can put traders on tilt, not having the discipline or patience or the wherewithal to focus on where it's easy to make money. There are days and setups where it's really easy to make money on, and then there are days that are science projects. Yes, these days are tradable, and we can count pushes and gaps and sweeps and hunts and the time of day and everything else, and we can get the direction right. But is that scalable? Do you really want to put a lot of size on that? And I know that there are traders that can scalp these markets with a lot of size, and they're very good at it. I'm talking about rinse and repeat, making things very easy and repeatable and scalable on any instrument so that you can duplicate your results consistently, and like Paul Tudor Jones says, make trading a pursuit of pleasure. Instead of trying to trade the same market every day, hunting out the same setup every day, or setups, you don't have to just trade one setup. As I've said, that opportunity is one of many that can be hunted, but understanding where you have an edge in the market, how that should set up in the session and the timing window that you're trading, and then understanding how to execute it in live time, and staying away from markets that potentially can put you onto tilt or put you into a choppy situation where now you're holding on to something, hoping it moves in a direction, whereas you could be sitting there for hours trying to micromanage a trade just to get a direction right. And also recognizing that just because markets close and break out, that we don't want to just try and blindly counter trend them. They can continue to trend. And so traders may be looking for opportunities to enter the trend, but we also need to be cautious of where and what session that opportunity presents. Rather than just getting into a trending market so that we can get a direction right, I'm focusing on opportunities that are scalable, where we can potentially rinse and repeat the same setups with size. And this is the type of market that can make that difficult, but at some point an opportunity will present. And at some point, as it always does, it will present. And when it does, we'll look for how it sets up on the day, and we follow the same process. Could be major red news on the schedule. We sit on our hands and we wait until after that news is released, and then we go back to work. Entry, stop loss, and a take profit level. So if traders are struggling, or if you had some damage done to your account this past week, I've received a lot of emails and questions regarding what can be done. And the first thing you have to do is focus on what setup you're hunting and do nothing else in between. Taking trades are not rinse and repeat or winning trade setups. That's hoping to get lucky, hoping to catch the low or catch the high, or get in a trend and catch a move. But rinse and repeat are the ones that you've seen over and over and over again on any instrument. The Euro USD broke out, pulled back, coiled with an inside day, and continued to explode in the long direction on the backside of the week. The Aussie dollar exploded in breakout, 1, 2, 3 lower closes, giving us an inside day signal before reversing off of an inside day and exploding vertically back inside of the range. A reversal setup for the Aussie dollar. New Zealand dollar did the same, exploded vertically, breaking out of the previous low of month level, inside day, and an explosive 3-day reversal. Now here's the thing. Traders in the Asian session or the London session, even the US session, may have had opportunities on one of these major pairs that gives a signal day, or their cross rate pairs in the session that they're trading. Now this is why it's important to understand the higher time frame. Now traders who are marking up all kinds of little bars and counting pushes and everything else, you're missing the scalable opportunities for explosive moves, whether they're trend trades or reversal trades. Trying to catch the moves with all kinds of volatility is risky. But when you have a rinse and repeat setup that can offer you easy money, then you understand sitting on your hands is one of the most important things that you can do, which is why I explain to traders, what setup are you hunting? Any instrument, it's irrelevant. Working from the levels. Now you might be inside because it's low-hanging fruit and the market has already come off of a level in an earlier session. But if you're counting little bars and marking up all kinds of lines and levels inside, you're missing the larger scalable asymmetrical risk-reward opportunity where we can go from one side of a range entirely to the other, or vice versa, in the long direction or the short direction. And this is one of my favorite quotes by Bill Lipschutz. If most traders would learn to sit on their hands 50% of the time, they would make a lot more money. It's important to have a very simple process. Build your watch list each day with 1 or 2 instruments that have come up as signal days, and maybe on the day itself you'll have an instrument that gives you a signal, and then how does price set up into your timing window in the session that you're trading, and understand how to execute that trade, entry, stop loss, and take profit criteria. There are only 2 things that a trader can control: how much they will win and how much they will lose on any particular trade taken, whether that's an easy money-making trading setup or a science project day. But I would encourage you, hunt setups where it's easy to make a lot of money on, and then be patient and willing to sit on your hands in between and hunt those setups and scale them up in size as your results dictate. Build confidence through accomplishment. Execution, discipline, and patience pay big dividends. Keep it simple, rinse and repeat, scale it up in size, and may the markets go with you. Have a great day, traders.